So, hi everyone, welcome to Investing Gurukul. So, we have Arun with us, who is an expert in commodity trading and investing in commodity stocks. He's built a lot of experience over the last 1.5 decades by investing in mining stocks, commodity stocks across different geographies like India, US, Canada. So recently, we've been seeing a lot of boom in gold and silver prices, and there are lots of conversations, lots of question marks, lots of serious warnings have been given. So, for example, there is one person who is posting buying silver in 2025 is like buying Bitcoin in 2020, if you understand this. And then there is a famous Twitter person, Muthu Krishnan, who is saying it may be a bullish time, but you have to be very cautious because silver has hit a peak in 1980. Then the next high reached in 2010, and then the next high has happened only after 15 years. So be cautious, be careful. Commodity cycles are time consuming, he's saying. So, so there are lots of points. So silver has surged while gold to silver ratio is at an all-time low. And then there is a Chinese government that is urging citizens to buy gold and silver. So this is a graph I mentioned 1980, 2010, 2025. So basically, there are a lot of questions. There are a lot of concerns. So I have a lot of people asking me personally. I have invested in gold, but we have should I sell now or hold? So all these are questions. So we'll get all the answers from the expert now. Yeah, Arun, now over to you.
Hello, hi Vignesh. Hello, hi everyone. I have invested in gold and silver and mining related stocks and also in commodity stocks. So I'm trying to build an understanding over the period of time. So it's been a learning experience as well. So there has been a lot of ups and downs. It's basically before we go into whether the price is correct or not, we need to understand why the price moves are happening because that is the basis. Because what was the reality in 1980 is not the reality now. So the price, like the price of a house in 1980 is different to price of a house now, right? The same land that you have, right? So you cannot just look at a price value as silver was $50 then and now it is $50. So that means it has reached the top. So that is not the way. So you have to understand the current reality. You have to understand what is happening in today's world and what are the reasons behind it. So once you understand the reasons behind it, then you can probably say whether where you are in that cycle. All right. So I think that's where I'll try to give some my understanding. So I'll just share my screen. I'll just do simple two or three slides and show you here. Now let me. Yeah. Okay. So basically to understand gold is often seen as a like a defensive investment, right? So it's like, okay, there is a geopolitical risk, so I should have gold because during the time of fear, gold will go high. So that is one way of looking at it. So usually from an investment standpoint in your portfolio, mainly in the funds, in the larger funds, they used to allocate like 5% gold or 7% gold, or anytime you buy something, like you kind of say that, okay, I want to have some hedge with the gold. So gold is essentially like a defensive, usually is seen as a defensive stock, or defensive asset to hold. And also usually it's a less volatile. So usually the price of gold, when it goes down, it doesn't go down in a snap. Like it's not like a Bitcoin where you don't see like a huge price swings on a day-to-day basis. So it's a usually like a steady investment kind of thing, right? But then there is also the gold is also a monetary thing. So like now we have US currency, USD as the reserve currency, right? But years ago, or decades ago, or like centuries ago, gold is the way by which the trade happens. Gold silver, copper. These are the way by which the trades happen. So I have gold, I want silk. I have gold, I want some bronze weapon or something. So they use gold to do the trading between different countries, or this thing. So essentially, it's a monetary. It's tied to the monetary side of things, right? So in that case, from an investment standpoint, there is gold, there is equity stocks, then there is bonds, right? So usually the gold prices fluctuates mainly from a US standpoint only nowadays, because US everything is now bound to USD, which is the reserve currency, right? So what happens in US, what happens in US, political situations, or or economic situation, is largely influences how gold is viewed. So in general, you have geopolitical risks. So there are four wars that is now going. Like we have wars everywhere. Like so, the different regions have wars. Russia, and also in Palestine, Gaza, and there are a few other places. Right. So yes, there is elevated level of risk. That's a given. Then there is in China. There is also a economic slowdown that is happening in the last few years, and they are coming. They're trying to recover on that front, but still, when you have those kind of economic pressure, they also like go defensive in that side, right? And then India and China are traditionally gold buying culturally, so there is that demand as well. Other than that, you also have the countries, the all the central banks are also buying gold because they feel that they have to have a safety net in terms of backstopping their economy, right? So that's why they are buying gold. Then there was also something that happened the recent past where for example, India's gold it might be in London's stock like a COMEX, like LME exchange or something. So we might want to bring back our gold from the foreign holdings. So there are strategically they countries look at, okay, I don't want my gold to live in another country, so they bring it in. So all these have been the contributing factor. But for me, the one of the most important contributing factor is how the US bond situation and other things are happening. So there is something called as a real yield, right? So when a US investor invest in a actually, this should read US 10Y, which says US 5Y. It should say US 10-year yield bond. It's a 4.5%. And then US current inflation is 2.9%. Historically, like the US Fed always say that, okay, we want to keep the US inflation below 2% or around 2%. That's their target, but they're not able to bring that below. Now the rates are also high. So essentially, what happens? The real yield is if I invest in a US bond, the 10-year TIPS bond, like I get 4.5%, but the inflation is 2.9%. So basically, 4.5 minus 2.9, what do I really yield is only 1.6%, right? So this might look positive, but then when you compare to history, this is not much of a trade-off for them. So that means that they need like an investment. Other investment is the gold. So they move the money to gold. So whenever the real yield goes down, that means it's bullish for gold. Now, what is the US Fed saying now? So that is why you need to like kind of understand. If you really want to understand how and why the gold is moving, you need to understand what is the US Fed is saying. So US Fed, they have problems of right now the inflation is not going down. It's sticky and it is going up, right? So that is one issue. Then there is also concerns on the job market side. So there are some unemployment numbers and other things are also slightly starting to raise a bit. So that means so they have to take a decision. Do I protect the jobs or do I protect the inflation? So in that situation, it will come to a point where yeah, the government might decide that they want to protect the job. So in that case, they have to let the inflation fly. What will happen when this inflation flies? This real yield will keep on going even more down. So there is a real possibility that even from here, gold could still go more and more and more, right? So yes, there is still a lot of even though gold has gone up like $2,000 or almost 100%, it has basically doubled in last few couple of years. There is still a lot of runway for it to go high. but it doesn't mean that you need to go and buy gold today, right? So that is the important thing. So there is you don't need to rush, but in your back of the mind, you should always have a thinking that gold should be part of your investment portfolio. And how do I actually get involved in that? So either you buy physical gold or you buy other like stocks related to gold. So those are the different ways of playing. But I don't want to go into that right now. So I'm just going to look at why the price, gold is going up, and then I'll also now go into silver,
So
right?
whenever
Uh,
whenever
yeah.
US bond prices go up or inflation goes up, the demand for gold actually increases. So the smart money moves from bonds to here, is it?
It's not really that. See, it's also that it's not like always, right? So you
Mm.
also have the US dollar devaluing also. So
Mm.
there is the two effects. So one is
Mm.
basically the money is, see, you have trillions of dollars with all these investors, trillions of dollars investment is there. They
Mm.
need to go and park somewhere, right? So
Okay.
right now all the money is in S&P 500 in
Mm.
the equities.
Mm.
But then if I am a Chinese investor and I'm putting the money in US S&P, but I'm
Mm.
starting to see the dollar value is going down. So
Mm.
yesterday I bought for $1,000, I bought five stocks for whatever amount. But
Mm.
in like 2 years time, if the dollar value goes down,
Mm.
then what happens? My actual investment value, when I actually get the money back into China or get the money back into India, there
Mm.
is a currency range problem is there. But
Okay.
right now, the S&P is growing even further higher than that rate of return than the dollar value devaluing.
Mm.
So
Okay.
dollar has been devaluing for the last year or so. So it's a
Mm.
compounding effect. So essentially what it means is the money invested in US is trying to move away from US. So when it moves away from US, it moves away. Why did it move away? People don't invest in the US Treasury. So
Mm.
or they don't invest in the US equities. Till
Mm.
date, people are investing in US equities. There is returns, right? But what if there is a US government, US economic slowdown or a recession happens? Then people will pull away the money from US equities. That will further devalue the dollar. So
Mm.
then where will the money go? It will go into gold or it will go into the
Alternative
emerging markets.
assets.
So
Yeah.
there is a real possibility that you also have a lot of investment coming into emerging markets, specifically like countries like Brazil, where
Mm.
Brazil is a commodity-based country.
Yeah.
At the same time, they're also emerging country. So if money from US is taken out, where does it go? It has to go into two or three asset classes, right?
Mm. Mm.
So gold is one of them. That is the play here,
Mm. Got it. Got it. Yeah. Got
right?
it.
Yeah. So it's not really like it's not always tied to one aspect. It's a multiple aspects. It's like
Okay.
if you have five, if you have three cases for bullish cases for gold, it will go up to some extent. But if you have five cases, five strong points for gold, then it goes even more, right? So
Mm.
it's actually like more and more people get like okay convinced, right? So that is the way I see
You
it.
have to look at it holistically. Yeah.
Yeah, yeah. It's not like all it's you can't just go by a simple number, and that's why I also said, just don't look at the spot price. You
Yeah.
just need to understand the reality of today,
Got it. Mm. Yeah.
right?
Let's
So
take.
this is just an example. So in this case, 1970 stagflation,
Can
where the real
can you
yield
share
went
the
deeply
screen again?
negative.
Yeah. Can you share the screen again?
Oh, is it? Am I not sharing?
Yeah. Yeah. Since we are talking. Yeah. Yeah. I can see now.
So now this is the like an example. So in 1970s, you had stagflation, right? What is stagflation? It's inflation is high and but economy is also down. Like it's like a recession plus inflation. So that is like the most extreme sort of situation where you have a inflationary pressures, but also the that is the buying the inflation pressures are there, but then there is also economy slowdown, right? The GDP is down or negative or something. That is the extreme case where you have deep negative real yield. In these, this is the best case for gold in terms of going high. Right now, till date, we are not seeing stagflationary data in US, but we did see one or two data points pointing to that. So let's say if a US recession comes, if it comes, it doesn't look that way. If it comes, and then at the same time the inflation is also high, then you would see like the real yield going negative, which means like it is even more bullish for gold. And that's why you have some of these, people who have, okay, $10,000 gold, or, all these kind of targets they have. So this is the most bullish scenario that could happen. So then there are other cases like when the yields went negative. So during the GFC crisis, it went. During the pandemic, it went. Um, so pandemic, as you know, like during that time, you had the rates because of the economy going down. The fears were there, so the investment has to move somewhere. It moved into gold and other places, right? So, yeah, these are the some of the examples. Now, coming to silver, right? So, what happens in olden days?
All
You
these
have gold.
instances, there was a spike in gold prices, is it? Or in general commodity prices?
Yeah, whenever you have the negative real yield, you will have the gold. So right, if you go see the gold chart during this period, it
Hmm.
went up like 10x or 15x. So
Wow.
right now, what we are seeing is only 100% up, right? So I'll
Hmm.
show you the chart bit later.
Yeah, yeah.
So at that time, you can actually see, or I can show you now if it's okay. I'll just switch. So if you see the gold chart of the,
Yeah,
see,
monthly chart.
this is the period of 2008 thing. So here, what you see in the green window, this green window is when the rate increase happened in US. So the rates went from 0 to 4.5, or during this period of 2004 and 2006, the gold, sorry, the rate increased. Fed increased the rates, and then in the blue window is the one where the US Fed started reducing the rates. Okay.
Hmm.
Now, the red window is the recession. So when the US recession happened, yeah, gold did drop. So you can see that it dropped from $1,000 to $680, nearly 40% gold dropped. But this is part of an overall large trend
Hmm.
where you see that the gold started from $321 in 2002. It
Hmm.
went all the way for a 10-year period up to
Hmm.
1,892, so which is like almost six times, right? So you had a period, if gold actually goes on a run, it can
Hmm.
actually do these kind of runs. So right now, where are we today? We have passed the green window. Today we are already past the green window where the rate has already increased. Now Fed has started to cut the rates. We are in the blue window now. Okay. So now the real question is the red window going to happen? Is the recession going to happen? If because why does Fed cuts the rate? Because they see economy is slowing down. That is why they cut the rate. Otherwise, there is no reason for them to cut the rate. So today we are in this blue to red window transition. Now,
Hmm.
as small as the window of the red. So here in this case, the red window started from November 2007. It went for almost 2 years of recession, right?
Hmm.
So it's a painful period during that time. Now, question is, are we going to get that, or is this window maybe it's 3 months, maybe it's 4 months, or maybe it's again 2 years? So if that comes in, yeah, you will see a drop of gold price because everything goes down. During a recession, everyone will sell everything. So even the gold that you hold, people will try to sell it because they need money for other things, right? So that is the reason it goes down. But that will be part of an overall bigger trend where once the rate cut is done, again the prices of because the economy will start to recover. At that time also, you will see a push here. So you could potentially have, so right now where we are, so if you see this chart might look like it is going very up, right? But if you see from a percentage point of view, if you take a percentage point of view, you're talking about only how many percentage here? One second. You're talking about only 93% here. It might look a big, right? But it's
Hmm.
still it's $2,000 with it's only gone up 90% here. But if you take a case of like what happened here, right? In this scenario, here, let's say if we are here, till this to this is again 135%. By the time when the recession started to when the bull market ended for gold, it went even more higher to 1.36. So you can always go high. So the gold is still in a bullish environment, but it doesn't mean that you will go always straight up. You will have this period of 40% down or 30% down. So the question is, how do you read the market? How do you how do you position yourself? Always try to buy when it is when it is low, or when it is when price is going down, rather than when it is price is going up. Don't chase. Rather wait for these kind of pullbacks and then buy it. Now, if I just quickly go back to this 1970s period, this is when the stagflation happened. So when I was talking about the real yield problem, right?
Yeah.
So look at where we are in 1970. Here, actually, this is where it started. 1972, $47 gold. And over the 10-year period till 1980, from $47,
15, close
it
to
went till it went till for 825.
yeah.
So you had almost like 15x that went up.
Yeah.
But again, you cannot equate that here today, where you cannot say it might also go 15x. No, it won't happen because US, I mean, the government did not, earlier, the gold was tied to the US dollar, so that is not the case now. So they did the dollar is decoupled from gold today,
Mm,
right? So you don't have the same situation, but it just gives you an example of what happens during a stagflation. During a stagflation, when your economy is down and also your inflation is up, the goal can actually go like even more. You're talking, let's say in the case of, so, in this 1 month alone, it went up 27%. Another month it went up 23%. Now, usually gold in the last years or so, if it goes 5%, 7%, it's a big thing, right?
mm,
So what I'm trying to say here is don't keep your mind on the price. Keep the idea on the thesis.
mm,
Is the real yield, is it is what is happening to inflation? What is happening to economy of US?
mm.
If you understand this, and if you understand the overall macro situation, if you follow that extent, then you will know where you are in the gold cycle. Right now, we are in the middle of the gold cycle. We are not at the end.
Okay.
Okay.
So I thought we are towards the end. So we are still in the middle. You see, like
Yeah, we are still in the middle because we haven't come out of the rate cut environment yet. We
mm,
went up. It can't be at that position. Why is Trump shouting at Fed Jerome Powell he's looking to fire him because he's not cutting the rates, right?
mm,
So why is he shouting? Because US has trillions of dollars debt, right? The
mm.
debt has to be serviced. You have to pay the interest rate. If
Yeah.
the more trillion it goes, the more higher the interest rate. If the interest rate is 4.5%, the government has to pay more interest. If the rate is 2%, their interest cost goes down by billions and billions, right? So US government wants the rate cut to happen.
Yeah.
But
Mm,
it is not a, but Fed is not, Fed is currently an independent authority, right? In
mm,
US.
mm,
It is not, the government cannot control it today, but Trump is trying to impose his views there. Now, Fed Powell is going out of his job, like his cycle is ending now. And who knows, the new person, whoever is Trump is appointing, could be like pro-Trump and pro rate cut, or pro like he might go out of independence. That's the fear, right? So
he
when
might
you have those
bang
kind of
bang on
fears
rate
coming
cuts.
in, yeah. Hello? Yeah.
Yeah, yeah, he might go bang bang on rate cuts. Rate cuts. I
Yeah,
guess.
that could happen. So my point is that US government needs rate cut to happen. So you still have half the cycle left,
Hmm.
right?
Got it.
And also we don't know what is the real impact of sustained rate increase, right? So see,
Hmm.
US, unlike in India, where you have like double-digit rates and other things, in
Hmm.
US, even like a 3%, 4%, 5% has a meaningful impact because they in their normal rate environment they get loans for 1% or something like that. So it's not the case now. So the um, even the like a normal day-to-day businesses, they need, the cost of funds has gone up so much,
Hmm.
right?
Hmm.
So that is the problem here. So the people need the rates to cut, the
Hmm.
government needs the rates to cut, but you cannot just like that cut it, because there are a lot of other factors. And because if you start cutting it, what will happen? The inflation will again go high,
Yeah.
because then there is no real point, right? So then what happens? You might cut the rate, but inflation goes high, then net effect is again nothing, right?
Hmm.
Because what happens when you cut the rate? When you cut the rate, you propel the economy. When you propel the economy heats up, then the inflation goes up,
Yeah.
right? So
Correct.
that is where the balance that Fed needs to bring in, and that is what they're trying to do. So the Fed has a very difficult job here right now. And because of the US economy, if US economy was in a good shape, if
Hmm.
it did not have any debt, then there are no problems here, right? Because there is a huge amount of debt, that
Hmm.
is why you have this. Even now, what is happening this week? The US government is basically shut down. They have shut down the US government right now. They haven't opened it back again because they still figuring out the funding for the budget in
Hmm.
the Congress, right?
Yeah.
So even now, as we speak, the US government is shut down, right? So they have a lot of monetary or budget related constraints and issues right now on all these things. So the wiggle room is very much less. There is only so much things can do. So what happens now if you're an investor? What do you look at this and do, right? So you then say, okay, where is my safety? So right now, safety is in gold, and that is why all the governments across the world are trying to buy.
Got
So as if you're a retail investor, you need to, it's not possible for everyone to understand all these things, right? So if you're in India,
it.
you cannot understand most of this. So again, the advice would be don't like follow everyone, but at least try to understand a little bit of why things are happening, and then you try to make your investment judgment or based on your risk or your profile.
Got it. Okay. We'll talk about silver in the next video. Thank you.